Okay, so now we're going to dispose of our plant assets. You can dispose of them by just taking them out of service and, just basically junking them, or they can be sold, but there is a process that we go through. So we'll start with an asset, say a machine that costs $10,000. Right now the accumulated depreciation on it is $8,000. We're going to sell it or dispose of it on September 1st. And the depreciation rate per month is $100, just to keep things easy. So what we would be looking at in terms of T accounts would be the machine on the books at 10, accumulated depreciation 8. So if we're disposing of the plant asset, we've got a two-step process to go through, unless we're selling it on January 1st. So since we're selling it on September 1st, at September 1st, the first step, update the depreciation to the date of the sale. This assumes that the last depreciation we took was at the end of the last year. So we would simply go depreciation expense, and I'm abbreviating here, and then you get out your handy calculator, January, February, March, April, May, June, July, August. That looks like 8 months to me. So it would be $800 to update the depreciation to the date of the sale. So you'd go depreciation expense, accumulated depreciation, 800. The next thing you have to do is remember that you did that, and so now your total accumulated depreciation is 8,800. So now, okay, now we can sell the machine, now we can dispose of the machine. Let's see, I should dispose of that marker. Okay. And so the first thing that happens is the machine has to come off the books. So I'm going to go machine, and that would come off the books at what it came on, which is the cost of 10. The accumulated depreciation has to come off the books because you can't leave that hanging around once the machine is gone. And so that's current balance is 8,800. Those don't add up, and so we have a loss on the disposal. So a loss on the disposal of the machine, of the difference between those two, whoops, disposal, that's right, okay, of 1,200. Okay, so that's the basic process. Update to the depreciation expense to the date of the sale. Make sure you take off the machine, you take off the associated accumulated depreciation, and then any difference will be a gain or a loss on the transaction. Okay, the notes show you another way, a little more, I guess, technical way to compute the gain or loss. It's going to be basically the difference between the book value of the asset and the proceeds. And here there's no proceeds, the proceeds is 0, so the book value would be 10,000 minus the 8,800, and the difference there is going to be the loss. Okay, so now what happens if we actually get some money for this? Say we sold the machine for, let's see, what do I have down here? We sold the machine for $2,000. How would that change what's going on here? Well, first of all, you do the same first step, update it to the date of the sale, and we'll just change this a little bit. We would still take the machine off the books at 10, the accumulated depreciation at 8, but now we would have received some cash. Okay, and in the example we received $2,000 cash. Okay, so now when we look at this, we get the $2,000 cash we received. Let's move this up here to make that look a little bit better. And so in this case, we end up with a gain on the sale of the machine, or gain on the disposal. And that would be the 800. Okay? So if you want to look at it in terms of book value, if you did the 10,000 cost of the machine less the 8,800 accumulated depreciation, that gives you book value of $1,200. Okay, that's the current, what it's on the books for. The proceeds are what you got when you sold it, which is the 2,000. So the 2,000 proceeds minus the book value gives you your gain on the transaction of 800. Okay? All right. So these aren't too bad, you just have to take it a step at a time. All right, so now let's look at a situation where we're selling it, you know, the same date and everything, except instead of 2,000, we only get 500. Okay, so now, let's see what happens with this. We can kind of give a little, you know, preview of coming attractions here. The book value is still 1,200, but now we've got 500 proceeds minus the 1,200, and so we are ending up with a loss on this one. When we do the transaction, a loss of $700. So let's see how this comes out. We take the machine off for 10, the accumulated depreciation for 8,800. We've got the 500 cash. When we add and subtract these, we end up, and we can see, oh yes, we have a loss on the disposal. Okay, so that's really about all there is on disposing of plant assets. The main thing that students tend to goof up is to forget to update the depreciation to the date of the sale. So if you remember to do that, it should be good.